Modi's fantasy polls.
इसका नाम एग्जिट पोल नहीं है, इसका नाम मोदी मीडिया पोल है। ये मोदी जी का पोल है, फैंटेसी पोल है उनका। थैंक यू।
BJP registers a landslide win in Arunachal Pradesh, ruling Sikkim Krantikari Morcha returns to power. India Today exit poll for the two northeastern states proves to be bang on. The markets have been witnessing some turbulence the past few weeks. Lots of anxiety about what the end outcome would be. Massive interest in the stock markets also around the India Today Access My India post-poll study. Now that those numbers are out, I want to introduce you to our guests joining me in the studio and those joining us internationally, starting with Shankar Iyer. Shankar Iyer is on the sharpest economic voices. My colleague and Business Today's managing editor, Siddharth Zarabi. Siddharth, welcome. Rajat is back with us, this time in a different avatar, a more management consultancy avatar rather than a political avatar. With us from outside, we've got Radhika Gupta from Edelweiss. Thank you very much, Radhika, for joining us. We've got Nilesh Shah from Kotak joining us. Also with us for a contrarian perspective is Professor Arun Kumar. So thank you for joining us, Siddharth. You've been looking at this non-stop. The level of interest in key stock market players around the India Today post-poll data, that was just insane, off the rocks. So what's your sense of how the markets are likely to react tomorrow? Let's start from there.
Gap up opening, as it is called in stock market parlance. I think one of the key events that we'll see is the return of the FIIs, who kind of stayed away and were a little worried and apprehensive about the results. Domestic investors will perhaps be stampeding towards an entry point. So it's going to be manic Monday, but in a very positive sense. And you will see within the entire pack, the modified stocks, so to say, including the PSU pack, the banking pack, defense stocks, and certainly the Tata, Ambani, Adani pack just flying off the shelves, Rahul.
Okay, let's get in Nilesh Shah. Nilesh, what's your broad stroke sense? There was some turbulence in the markets, even though the markets have been near their all-time highs. But now that the exit poll numbers are out, what are you looking forward to Monday morning? How are the markets likely to open?
Thanks, Rahul, for having me over here. As Siddharth mentioned, markets are likely to be positive on Monday. The economic growth for fourth quarter came well ahead of expectation, and full year growth at 8.2% is almost 25% more than what we had started at the beginning of the year. The exit poll also is confirming markets pricing in of continuity of government. And as some of the traders had liquidated their position, it's quite likely that either they will cover their short position or they will join in the party. So market should be supported with GDP growth number, with trading positions, and obviously with the exit polls getting converted into actual results.
The interesting thing I find, Radhika Gupta, is the fact that the Indian domestic players seem to have a much better pulse of how the markets are likely to react. Not so much the international players who seem to be all over the place. FPI money oftentimes wanting to exit because they're not certain of what's happening. The domestic players seem to be on a far more sure foot. What's your sense of how the markets are likely to play out in the coming days?
Well, I think this is an outcome the market has been hoping for. And, if the exit polls turn into reality, this is an outcome that the market will certainly cheer, combined with the fact that there is strong economic data. Rahul, I tend to agree on the point. I've been abroad, talking to, a lot of foreign investors at foreign investor conferences. And while people are looking at India with a lot of interest, especially in the backdrop of China, I think the question mark was the election event. And with that out of the way in the next week, I think you should see a lot of foreign interest convert into capital. And I do think the domestic investor has been sharper in their assessment of the India story than the foreign investor who's been in and out. But I think this could be a very meaningful catalyst for foreign investors to come back into the market. So I think the
interesting point. You're saying that the fillip could come from foreign investors who've been on the sidelines of the markets because they weren't certain. investors who are both foreign and domestic are the likes of Samir Arora, who's joining us right now from Singapore. Samir bhai, welcome. Great to have you with us. You know, both Radhika and Nilesh taking a bit of a pot shot at FPI investors who weren't certain of exit poll results and for various reasons wanting to stay away. What's your sense of these numbers? You've been tracking them very carefully, and how do you see the markets play over the next few weeks?
I think markets will have a good run based on the fact that the domestic mutual funds and domestic buyers are in, and that the foreign investors who've been out for a few months but broadly well invested will also come back for sure. So I agree a little bit on the margin. These guys have been selling, particularly for the last 2 months, and that may turn out to be a wrong decision. But overall, they have $800 billion invested in the market. So if you make the market go up 3%, they make 25 billion in a few days. Overall, they'll be back. They have been investors for 20 out of 24 years. It is true that on the margin, the domestic investors have become bigger, but we need both for our market, and we should strive to get those back rather than believe that everything can be done just because we have domestic buyers.
Siddharth.
Samir, you know, just in case the outcome were to be different, would the FIIs have behaved differently? Because there are some questions that are being asked here as to why the FIIs were so skittish when broadly the direction for continuity was well established. It was just a debate about the margins.
Actually, if you see the marginal, first of all, just say, for example, last year, India got $21 billion, and the total FI flows into Asian emerging markets, ex-China, ex-China was 31 billion. So we got like 60% of all the flows. This year, the total inflows collectively are about 12 billion, and India has actually had negative 2 billion. So in the scale of things, if you combine 2 years, 3 years, 4 years, India has got a large proportion of these flows. You know, these days also we have a lot of these hedge fund millennium type money, which is driven by very low net exposure. So if you see today, I was reading that FIIs have a record short on the futures market, in the index futures market, but they also have double of that long in the single stock futures market. So maybe they have bought the sort of Modi associated or the economy associated stocks and shorted the index as a hedge. I'm saying don't worry too much about them in the short term. In any medium term, they have been investing disproportionately in India relative to other emerging markets, and that
Okay,
will
let's
continue
just zoom
and maybe
out
increase.
for a moment, because you know, in the course of this election campaign, I had an opportunity to spend some time with some top international fund managers, and one of their big concerns, Shankar Iyer, was that they thought that factor market reforms have to be dealt with, whether it's on land, labor, energy, access to credit, agriculture. Those are issues that the Prime Minister has touched, singed his fingers and pulled them out, like we saw with land acquisition, like we saw with the farm reform. Now that he'll get this kind of mandate, international investors would be wanting the government to head in that direction. But you understand the political economy as well. Will he want to take a risk again, or once bitten, thrice shy?
Well, the large part of these reforms are vested in the state governments. The power to amend land, the power to fix the labor laws, the subject of agriculture is all largely in the state governments. So what needs to happen? So if you remember in 2014-15, Mr. Modi spoke about Team India. And thereafter, I don't know what happened. That angle approach was not pursued. His ability to move his own party ruling in those 12, 15 states has struggled. For instance, if you take farm reforms, just one part. So, okay, so you didn't do it at the center. Why didn't the states pick it up? So, in fact, I've written a piece saying that how the BJP let down Mr. Modi by not pursuing this idea. So now there is some traction on farmer produce organizations, on some of the stuff. But this is an area that everybody is looking at as to whether you're going to do this. If we are talking about a China plus one strategy, then we need to find ways to find the sites for those people to come in. So one way would be to look at the idle space lying with PSUs, land banks. The second space would be to have kind of dovetail the state government investment needs. We have this kinetic Karnataka, magnetic Maharashtra, all this stuff. So I think there is a real urgency here now to bring the Niti Aayog into the play to sort of connect the states with the
So you're saying deal with these issues on a state-by-state basis. Rajat, the expectation can be, now that you've got this kind of a mandate, at least in the exit poll, and then we'll see what happens on the 4th, foreign investors in particular, whether they're portfolio investors or they want to come in and do direct investment in India, they would like to see the government move the needle on these kind of prickly reforms. Do you see this as a window of opportunity to push things through in the initial few months? Or do you think the Prime Minister, after having burnt his hands with land acquisition and with the farm law reform, will now say, let's find other ways of doing it. Let's not try and take the bull by the horns?
So, Rahul, over the past 3-4 months, I have interacted with several boards of investors as well as foreign companies willing to come into India for manufacturing. Largely, the consensus is that let this election be over. No matter what you say and do, these are unpredictable elections, especially of a diverse country. So everybody was just pausing, let this turbulent period be over, and then they will come all in. But one thing that is underlined, and it is pretty clear, these next 5 years belong to India. There is no other island of hope across the world. You look at the state of affairs in all other emerging economies. Where does global capital go? Where do they find places where the low-hanging fruits are enough? The bases are low for them to step in and yield and generate enough returns. So certainly India is that island of hope. Now, how does Indian bureaucracy, along with the political administrators, tend to work together to implement some of these reforms? What I can tell you is that these 100-day programs, see, every government, no matter it is a continuity of the incumbent, has its own honeymoon period. The next 125 days, the Prime Minister has asked every ministry to actually write down priorities, priority reform areas, so that he can quickly push those reforms through before the opposition sets in and does the regular politics and derails projects even if they are.
What's your sense?
Will
they bite the bullet? Or
absolutely, and that midnight oil has been burnt, continues to be burnt. 10 groups of central government secretaries busy at work, and many important pieces of policy under works. For example, a new e-commerce policy, digitization of land records, because land was spoken about, changes to the SEZ law to perhaps allow sales in domestic tariff area, moves on the farm sector. This is what our reporters at Business Today have been reporting, expansion of the PLI scheme. So a lot of work is going on. And Rahul, there's one key point that we need to keep in mind from a macro point of view, and we have Professor Arun Kumar as well. We have had fantastic growth. 8.2% is not a number to be sort of laughed at all. Inflation is under control, deficits under control. We have a stable rupee, solid corporate performance, manufacturing capex infra is up. But the key point is, how will the new government, the incoming government, continue to maintain growth at this level in the current financial year? Because all experts suggest that there is a tapering off of growth that could happen in the current financial year. So this government, the new government, will have to hit the ground running with a bunch of things to keep the economy running at the same momentum that we closed the previous year.
Let's get Nilesh Shah, because he also, in different capacities, advises the government. Nilesh bhai, now this concern, and I'm sure you're hearing a lot of it, that they would, international investors in particular, would like to see the new government bite the bullet on tough reforms, which in a political context are very difficult to sell because they're far from being populist. We saw how the likes of Tejasvi Yadav were accusing that the government doesn't want to hire people because they want to disinvest and they want to sell to the big companies, and that became very prickly. Do you see the government being bold in its economic outlook, or are they likely to play safe? What's your best sense?
The market is certainly expecting India to do big bang reforms. And for example, if we have to accelerate growth from here, we have to capture the China plus one opportunity. In manufacturing, India is not as competitive to rest of the world, thanks to higher power cost and higher logistics cost. Power costs remain high because agriculture power subsidy is loaded onto industrial power. Logistics costs remain high as passenger fare subsidy is loaded onto industrial freight. Now, ideally, this subsidy should be absorbed in the budget, but we didn't have that kind of fiscal space. Now, thanks to the market movement, PSU market cap has moved from 15 lakh crore to about 65 lakh crore. That's a massive jump. If we can divest more, monetize PSU more, and use that to partially take on the subsidy of passenger fare and agriculture power. To that extent, our manufacturing will become more competitive and they will be in a position to go and capture China plus one opportunity. It will create its own momentum of further employment, which will boost consumption. So something like this out of box, not attempted in the past, could change India's growth orbit.
No, but if you look at the Sankalp Patra of the BJP, there is no mention of disinvestment, and even during the campaign, very clearly, because it could be politically expensive, therefore, there's no talk of it. Radhika Gupta, this idea that the markets, corporate players are expecting big bang reform, and especially on the back of a big victory, if it comes to be as predicted by the India to Access My India poll, they'll expect it. But the government, each time it's tried in the approach that they adopted, seemed to have run into heavy weather.
I think the government has, instead of big bang reform, I think continuous reform is what we've seen in the last 10 years of the government. I mean, there's very clearly a vision for 2047, Atmanirbhar Bharat. For instance, I think PLI has been a tremendous success. Expanding the net of PLI is incremental and sensible reform. There was mention of China plus one. Now, this government has been very optimistic on the semiconductor opportunity, but that's been a little bit of a misfire. Could that be big bang reform? Certainly. I think this government has been very optimistic on Startup India. There's a lot of reform that can be done on Startup India as a fuel for this economy. So I think laying out broad vision and continuous reform is what I expect from the government rather than overnight reform in the next 100 days.
Okay, the markets always, Shankar, want big bang reform. Nilesh also talks about how you have to bite the bullet if you want to capitalize on the China plus one opportunity. But then there is the political reality to deal with as well.
Well, there's a sort of divorce between what's happening in the real economy in terms of digitization, where you get instant results, instant apps, instant everything. And then there is the process of democracy, which is slow, grinding, messy. The thing that is sort of striking everyone is that these are issues that have been discussed for over 20 years.
Correct.
The cost of power, for instance, may be mitigated if the success comes to solar farms. Now, that's an idea that went up. Reserve Bank created credit facilities for it, but the state governments have to do it. The problem in India is that we give state governments a free pass over economic performance. And all the pressure of economic performance is loaded onto the center. It is true that the BJP rules in those 12, 15, 16 states. And which was the last time you saw a BJP chief minister actually pushing for reforms? Maybe Yogi Adityanath, maybe, okay?
But I just add one more point on that. What matters in the state is the state capacity. Most of the best talent of our country is actually at the central government level. You look at the state bureaucracy levels and look at their finance ministry, their ability to execute, have a proper financial plan. None of that exists.
But Rajat,
and most of the execution is on the states. Center only is responsible for policy making.
Let me put that this way. The farm laws were passed to the center, they were withdrawn. You have a draft, you have a template, you have the FPOs, you have the cooperative sector. Amit Shah has taken over the cooperative ministry. Okay. What stops them from taking it further on the states? Agriculture employs 45% of the workforce. 45% of the workforce survives on 1/6 of the national income. You can leave alone all the other statistics in this country. This is the one single reason why India's per capita income is where it is, despite being the fifth largest.
So we've
economy.
looked at what is rosy. Let's go across to Professor Arun Kumar, who can potentially tell us about what can go wrong. What is it that you're most concerned about, Professor Kumar, as we see the markets likely to cheer the exit poll numbers tomorrow morning? What's your sense? What would you be drawing people's attention to in terms of what all can potentially go wrong?
So, the markets represent about 1,500 actively traded scripts, or maybe 6,000 companies that are on the market. But we have, on the other hand, 600,000 small and medium enterprises, and we have 60 million micro enterprises. They don't get represented in the market. In some sense, even agriculture gets marginalized in the market. So what we are talking about in terms of the market is a very narrow band of economic opportunities. So what I would think is that what we need, if we want to check the problem of unemployment, of inequality, and especially because our GDP is growing, but the consumption share is decreasing. What it implies is that the inequality is increasing, and that's what is creating problem of demand. And when the demand is short, then private investment would not be buoyant. Government has increased its investments. Central government has increased to 11.11 lakh crore, but that's roughly about 10% of the total investment in the economy. Foreign direct investment, portfolio investment, is not doing very well at the moment. So overall investment is not really very buoyant. To boost that, what we need to do is increase purchasing power. And agriculture has already been mentioned, where 45% of the workforce is. And of the MSME sector, the micro sector has 97.5% of the employment. So if you don't boost the micro sector and the agriculture sector, demand will remain short and the growth will begin to peter out. External sectors also got a lot of headwinds at the moment. What's happening in Ukraine, what's happening in West Asia. So we won't be able to depend so much on exports. So I think the internal market is where we have to focus on. And there we have problems vis-a-vis agriculture, where you have extreme weather events in the last year and a half, which have been affecting our agriculture growth. We have problems that the education and health sectors face. Without that, your productivity will not increase much. We have problems vis-a-vis R&D. Our R&D expenditure is 0.7% of GDP, whereas China is at 3%. Other countries are more than 3% also. So these are some of the problems that in the long run we have to tackle. And for that, the new beginning has to be done now.
Shankar Sharma also joins us. Mr. Sharma, welcome. Great to have you with us. We were asking everyone in the beginning about their sense of how the markets are most likely to respond to these exit polls, and also in terms of sectors. We've spoken about the larger markets, but if you look at the sectoral play, which are the sectors at this moment from your lens seem most exciting to you?
Hi, Rahul. Thanks for having me. Sorry, I was traveling. That's why I couldn't join earlier. I just arrived. Yeah, so I mean, I did see the exit poll numbers late last night, and they have been just astounding, to say the least. Given these kinds of numbers, and assuming they actually play out in reality on Tuesday, I think markets are just going to be continuing the same path we've seen since the bad days of COVID. I see nothing changing on that front, at least not for the next 1 month. This will have enough legs, this set of numbers, for the markets to propel higher. That said, let me also give you a little bit of a different perspective, that the government has, and the finance minister has very clearly said that the fiscal deficits that we have run since 2021, which was the COVID year, have to be wound down. They have to be reduced. And once they are reduced, as the fiscal glide path has indicated, the real question will be, can the market sustain momentum 6 months out? Because a large part of this current bull market has been driven by very high fiscal deficits in a good way. I'm not saying this in a bad way. The fiscal deficits have come out of higher capex spending by the government, which has really driven a lot of the spending down to the smallest companies in India. They have benefited. All block numbers have been fantastic. The question is, when the unwinding of this fiscal deficit starts, which has been indicated for this year, will that result in a kind of slowing down of the economic momentum? To my mind, there will be some degree of slowdown that we will experience. The markets have had 4 fantastic years. We are into the 5th year of this bull market. The 5th year of a bull market typically is like a 5th-day test pitch. It can be very tricky. I'm not saying it's going to be necessarily a bad pitch, but it's going to be a very tricky pitch from here on. So this current momentum will last maybe a month or 2 months, but after that, economic realities of a lower fiscal deficit will start to kick in. We need to be mindful of that.
See, that's a very important point. But can they cut back the Kisan Samman Nidhi, the food-free grains? Can any government now pull this back?
Well, we just need to take a look at what Mint Street is doing to support North Block, and the most recent dividend is just one part of that. We have details of what the RBI has given by dividend, but very clearly, the larger question is, how does the government manage its finances and spending priorities to ensure that growth momentum doesn't stop? there is a slight slowdown that is expected. It's been factored in completely, including my market participants. You know, the bigger thing in the market is not the fact that in the gray market since yesterday evening, the Nifty is projected to rise 600 points. It is also not कि अब की बार 24,000 par Nifty. Forget that. The bigger thing that market participants and broader economy stakeholders are talking about is how does Modi 3.0 ensure that the spending priorities that you spoke about, Rahul, continue while the fiscal is malingering. I think that will be the bigger challenge for the incoming government, the incoming finance minister.
But there, to their credit, the government was quite responsible and not profligate in the promises they made in their Sankalp Patra, unlike the opposition parties. Okay, we've got 4 very important market players, and I want to go around and do something a lot of fun, because we can pull this back 6-8 months later. And I'll start by asking Samir Arora first. If you were asked to give an outlook for where you see the Indian stock market at, say a month, 6 months, a year, and then more in the long term, what's your sense for all those millions of people who hang on to every word of what you say? Samir Arora, we'll start with you. Play soothsayer for the markets.
So I couldn't hear the full question for some reason, but if you can hear me clearly, my big picture. I'm okay. Okay. So my big picture logic in the short term is that you will make 5-6% this month itself, starting with 2-3% tomorrow. And then, you were talking about how to attract foreign investors, but I think FII investors are easier to attract, provided you don't put them into trouble by increasing capital gains taxes in the budget, or maybe coming down too aggressively. But I think they will on options and futures, which will change some market sentiment, but that one may be healthy. But please don't mess with capital gains taxes, because please look at the world, that the world is also doing quite well. It's not only India, the US market this year is up a lot also. So nobody's overly feeling that post a 20% say tax also we can make similar returns. But if we assume that there'll be nothing negative done on taxes for investors, then I would think in general you make around 15% a year, because that is the history, that is the corporate earning growth on average, that is plus minus 2-3% of the GDP growth, which is say 10-12% in nominal terms. So to make 14-15% at index level has been the norm in the past and quite reasonable to expect in the future. But this month itself, starting from tomorrow, because of recent selling by FIIs being reversed or stopped, and generally a very good exit poll and therefore expected good results, I think this month itself will be very good.
Interesting. Let me now put that question to Nilesh Shah. Now, you also made a point about futures and options. And as I speak to key players in the finance ministry, this is something the PMO and the finance ministry are both very worried about, that there's a lot of this trading happening. They think it's being done by people who don't fully understand, that they're speculating too much, that this is unhealthy. And at some level, this needs to be dealt with. Do you think they will come down? Because as Samir mentions, that could impact sentiment. And also, if you can give us an immediate short-term, a mid-term, and then a more long-term outlook from your lens at Kotak Mahindra in terms of how you see the markets fare. Nilesh Shah.
So Rahul, undoubtedly in FNO trading, we have seen that 89% of people who participate have lost money and only 11% have made money. Generally, the retail investor is on the losing side, and high-frequency traders having access to better algorithms and computing power are on the winning side. Undoubtedly, the government and the regulator are looking at it very carefully, and there will be certain steps to ensure that FNO participation is meant only for informed players. There's also one more thing which government should be doing. Between FY21
can I pause you, Nilesh, by to say, why is that fair? If somebody wants to punt, or if somebody thinks he has the sophistication to be able to do it, or wants to use some AI tools to play the markets, why should he be stopped? In just the spirit of a capitalist economy or in the spirits of free markets, shouldn't he be allowed to try his hand? I mean, ultimately, it's his money. He's burning his fingers. After, if they lose money consistently, he'll back off.
Undoubtedly, that's an argument. But in cigarette also we put a sign that cigarette smoking is injurious to your health. Why not put that on FNO also, that for an ordinary investor speculating in FNO is injurious to your health? But the larger point, Rahul, is that we have to nudge people towards appropriate investment. between FY21 and FY23, Indian households put about 4 lakh crore in mutual funds and about 1.5 lakh crore in direct equity. That's about 5.5 lakh crore. But 9 lakh crore has been invested into currency notes. Now, we all know currency note is a depreciating asset. We have to nudge people from being a good saver to also be a good investor. That's the second thing. And in terms of market, I think market will be positively biased because of various things which Samir Bhai mentioned. But I think this is a market where you should be playing for a longer term rather than shorter term. Undoubtedly, markets will go up as well as down. But I think every correction is a great opportunity to add to India growth story.
Radhika, how do you look at the Indian markets at the moment in the international context? A lot of commentary that the price earning ratios are such that the market is already overheated, and a lot of this is just domestic money because it frankly has nowhere else to go, and therefore they keep pumping in those 1500 odd scripts, and this is not something that can continue. At some point in time, economic reality will catch up.
I don't think the markets are divorced from economic reality. I think foreign investors look at India as a very promising market, a very promising set of demographics, and a policy stability that is now set to continue. Now, when you look at India, you see a promising growing market, and these things are often not cheap. On the contra, foreign investors, most of them who are looking at China, say this is very cheap but uncertain. So in India, you're getting promised a certain amount of certainty and growth, and that comes at a premium. And remember, in the last 5 years, a large part, when we study market returns, they come from two places. They come from multiple re-rating or underlying earnings growth. A dominant part of market return is coming because of underlying company growth. So I don't think the market in broad base is divorced from reality. Could a few stocks, could a few parts of the economy be overheated? Absolutely, that always happens. But coming back to your point on global investors, as I said, I think this is an important catalyst from them. I do think the budget event, Rahul, the first budget is an important one because I always dread budgets, although this government has always positively surprised me. Because what foreign investors need is an environment of policy stability and tax stability. Samir also mentioned that. So as long as you don't upset that apple cart, I think you have a great catalyst for foreign investors. But the short-term trigger that could be worrying is what happens in the budget. I don't expect it to be a problem.
Siddharth, you want to take us through the preparations of the budget at the moment?
Again, the core of that is what is being done by the secretaries, Rahul, and there is going to be continuity. And that is why, if you recall, the interim budget had also given a medium term and beyond that view. One quick question to Shankar. Shankar, given the context, and we are still discussing exit polls, from a broader macro and market valuation perspective, are there any risks that you would like to talk about? Because a large part of the audience of this show would be the newer investors who have come into the markets and perhaps lack the sophisticated understanding that you could share with them. What are the risks for the Indian market in the current context?
Good question, because obviously the bulk of the monies that has come in the last 4 years, has come from very new investors. Foreigners have been actually sellers. So, and the bulk has come from, new entrants into the stock markets. And they have not really experienced what even forget about multi-year sort of flattish returns or negative returns, but even 1 year negative or 1.5 year negative. To my mind, the market has very high.
I'd imagine you'd have the best internet connection, but at this moment that doesn't seem to be the case. Are you back with us, Shankar Sharma? Can you hear us? Okay, so we'll go.
Quick one interjection to Professor Kumar. You made that point, and I just want a quick response from you. The first 2 months, April and May, have seen virtually zero large contracts awarded, and basically this will become a 10-month year as far as government spending, which has done all the heavy lifting in the economy in the past few years, is concerned. What do you think needs to be done so that the government spending side that contributes to GDP growth does not suffer on account of these couple of months?
What the government needs to do is, generate demand in the economy. Then the private investment will become more buoyant. I think the problem has been that some sectors in the private sector have done well, and there the investment is going. But across the board, I think the investment has been slow because demand has been an issue. So I think what the government needs to do immediately is to pump in demand into the economy. And I think one of the panelists was already mentioning that if the fiscal deficit is being run down, then what happens to demand? Especially if we are not able to boost agriculture incomes. And as Shankar was saying, 45% of the workforce is in agriculture. And as I said, 97.5% of the workforce of the MSME sectors in the micro sector. These two are very crucial. But unfortunately, what we saw in the budget was that while 11.11 lakh crore was being pumped into capital expenditure, but in real terms, expenditure on education, health, and rural development, they had been cut. Those need to be boosted because the 11.11 lakh crore is going into largely capital intensive areas, which would not generate that much employment. So while it would create demand for steel and others, so indirectly create employment, but directly it would create very little employment. What we need is much more employment generation, especially in the unorganized sector. If that is not done, then I think the private investment will also not pick up. Even though RBI's figures for capacity utilization do show that it's risen compared to the pandemic when it had dropped below 70, it's come back to 72, 73, but I think it has to go further up for the private sector as a whole to invest more. That's where I think the government needs to
spend a moment on that. But Rajat, on this point about the need to draw down some of the government benefits that were started during the COVID pandemic, economic rationale says there was a COVID-induced measure and therefore it has to be pulled back. The political rationale is you got elections in Maharashtra, you got elections in Jharkhand, you got elections in Haryana, you got elections in Jammu and Kashmir, and therefore, are you going to be able to do that politically?
Well, this is why I wanted to pull out this data, and I have been able to. I was looking at subsidies, central government subsidies as a percentage of GDP. The only high point of this number was 3.8% that happened during the COVID year because the GDP also fell and the handouts that were given also increased. That's the only peak. Since then, we have seen a consistent tapering. Right now, it is at 1.3% only. So our historical subsidy numbers have been far higher than where we are today as a percentage of GDP. So if we keep growing our economy, we will have bigger purses to spend and support the.
So you're saying there's no need to reduce the COVID?
Certainly
benefits.
not. In fact, there is a window that Prime Minister has to actually further double down. Will he do it now? Would he do it later? Is his political call? But I believe that the subsidy numbers are very, very healthy. It's largely because our fuel subsidies are out now. We don't have that. I mean, there could be some new set of subsidies which the government can plan, especially the Ujjwala Yojana. I mean, we were seeing so much drama around politics, and this is the political economy part of it, that people putting up cylinders, opposition party, praying before and asking people to go and vote. All of that drama Prime Minister has seen very closely.
Rahul,
He would want to roll out new set of schemes in the future to support the poor when it comes to his pet schemes like the Ujjwala Yojana.
Rahul, you spoke about the electoral pressure and withdrawal of subsidies. I would say that one nation, one poll will take care of that for a 5-year period.
Okay, let's spend a moment on the investment cycle. Arun Kumar spoke, Samir Arora, about the need for private investment to kick in. We've been looking at capacity utilization being in the 70s. The finance minister herself has spoken to us when Siddharth and I interviewed her, saying that there has to be, she's hoping that a virtuous investment cycle will kickstart, which will then sustain the India growth story. Do you see that happen? Because it's almost as if you're chasing a panacea, but never seeming to get to wherever that mirage really lies. Samir?
So, the thing is that so far government spending has done all the heavy lifting of government capex. But I think over time, as the confidence of the investors increase that, okay, this is the same government and continuity of policy, it is but natural that will increase. Plus also the fact that PLI schemes and others are now getting into shape will mean that overall there'll be manufacturing growth and therefore capex related to manufacturing growth. But the thing from a stock market point of view is that there are not very many stocks that are direct plays on this unless you start calling the old companies that we have and start calling them manufacturing, but we call them automobile and somebody called them pharmaceutical and somebody called them something related to capital goods, but now they are all put under the bracket of
No, so let's spend
manufacturing.
some moments, Samir, on the sectors. Which ones do you think are from a sectoral perspective, the sectors with the maximum upside?
So I think that the maximum upside is for Indian economy related, as contrast with say the IT or the pharma, which in the short term, medium term does not depend on government policies and more reforms and liberalization. So I would think if you want direct highest delta, I would think that will happen in power sector and infrastructure type sector where government spending, government focus is the highest. The other sectors are, many of them are going to grow when India grows, and some of it depends on when the world grows. But if you're looking for delta on a budget time kind of framework or what new government policies will be, maybe they introduce GST in gas or something, and therefore oil and gas might be beneficiaries from that angle. So those are the, on the margin, the new sectors. Otherwise, from our point of view, we like the financial sector the most in general because it has not done as well, and traditionally it does well. And it's psychologically easier to buy a sector which is not trading at all-time high valuations.
Let's put that same question to Shankar Sharma, who's now back with us. Mr. Sharma, your sense from a sectoral perspective of where you see the maximum potential for upside?
No, so I just wanted to answer the question I was asked prior to my net drop. Basically, return expectations of the average investor, they are very, very high. That's my biggest area of concern right now. It's not what returns the market will give. It's what returns the investors expect. And I hear on Twitter all the time that 12%, 12%, 15%, 18%, 25% is super easy. If you put in 1 crore, you compound 25%, you will have 100 crore at the end of whatever period. And I sit and laugh that it's never that linear in markets. It never can be. That's not the nature of this beast. I think the real problem is excessively high expectations of the average investor. For old timers, we know that, in some years you will be down 5%, 10%, even 20%, but on the average you will make 15%. But here it's 15% every year, year after year as a minimum. That, I think, is the single biggest risk to the markets, excessively high optimism by the average newbie investor. Now, as far as sectors are concerned, if the government capex numbers are maintained, but not really ratcheted down, I think the same sectors which have done well in the past, and broadly more than sectors, the small cap end of the market is something I have founded the table on, and I don't see anything changing there, even going forward. I don't think large caps in India are the place, and I'm sure many of my mutual fund colleagues here, friends here, will disagree because the bulk of the money does get invested in large caps. But if you see the performance differential between large caps and small caps, it has been amazing in the last 4 years. And looking at just the numbers outlook for small caps, I meet them all the time. The number outlook is amazingly strong for the next 12 months. So I think the performance differential between the large and the small cap market will be substantially in favor of small caps. So forget sectors. The size effect is that the large caps will be struggling a tad, small caps will be on an absolute roll.
Shankar, a quick follow-up to that. From a broader global perspective, including the fact that there are several important elections and the big one in November in the United States, what is your sense about inflows into the market? Not in the immediate kind of question around FIIs, but broadly, what is likely to happen to capital inflows and what will its impact be on the Indian markets?
Is that a question to me?
Yes, Shankar, that was for you.
Yeah. So, I think the FPIs or FIIs, whatever you want to call them, have been really, I don't understand the behavior, to be honest with you. If the behavior was that India is an overvalued and a market and an overvalued market and a market that has done too well and hence take money off the table and get into laggard markets, that strategy has failed consistently over the 30, 35 years that I have been in the markets. Markets work on only one principle. You have to buy strength. If you end up buying weakness, inevitably you will be underperforming the markets. This buying weakness, selling strength strategy works very, very minimally and very, very occasionally. Most of the time, the strong become stronger and the weak remain weak. And over the last 30 years, 32 years, the data is very, very clear. Number one performing market, US. I'm talking dollar terms. Number two performing market in the world over a 30-year period, India. Why on earth would you sell India and go and buy China or some Latin American nation when the data is crystal clear? Number one, US by far, but number two is India. So I don't understand FPI behavior at all. Maybe Samir can throw some light on it.
Okay, let's
But
let
frankly,
Samir answer.
I don't
Because
understand why people have been selling
Indian
India
money
and buying,
managers who are extremely
all kinds of
bullish
other
on India, but extremely shrewd foreign managers, at least till hindsight tells them otherwise, don't seem to be as bullish. So why is that the case? How do you rationally explain that, Samir Arora?
So, just to tell you this, from 2010 to 2020, MSC China beat MSCI India. It's actually the last 3 years which are so bad that they spoiled the last 5 years, 10 years, 15-year kind of numbers for China. Actually, previously, China was not so bad and it could absorb a lot of money, and therefore that was the story, and some of them are wrong. But I'm saying this idea that foreign investors in general have been avoiding India is only 1 or 2 years. If you look at last 24 years, in 20 years, foreign investors have been net buyers into India, including last year, 21 billion. And as I said in the beginning, if you look at India flows from in comparison to global emerging markets or Asian emerging markets, India has been getting since at least 20 disproportionate money. And for example, in what was it, 22, when India had outflows of some, I think, whatever, 10, 20 billion, the total outflows were some 70, 80 billion from these markets. So India has been now a big part, both when money is coming in and when money is going out. I don't think it is too much of a view against India and this and that. Maybe last 1 or 2 months from numbers, it looks like that. But if you see last 3 months, China market is up nearly 20%. So even that on the margin, somebody may have done. But as I'm saying, forget about that. They are coming in. You can see it from the conversations. You can see it from their discussions. It's just that they are trying to be over smart, and that plus minus 6 months they will come. There is no way they can avoid it now. It's too big a market to be ignored.
Quick question to you, Shankar. Here, this point, and since the morning we are hearing about 20% of a shift in manufacturing, from example, happening out of China. The China plus one now actually becoming concrete to India, and Indian companies don't have capacity to serve it. Is that something as a trend, Shankar, that you see continuing to strengthen, and that in turn feeding into the economy, the Indian economy?
Well, two things you must sort of factor in this. The biggest beneficiary of the China's plus two is Mexico. Mexico has got Chinese companies going and investing in Mexico and using the NAFTA or whatever US CAMO that's called now. India has shied away from all kinds of free trade treaties to sort of benefit from some of these issues.
But that's likely to change, for example, with the United Kingdom as well.
UK is, I'm sorry to say this, not really material or relevant to the global market anymore. I'm sorry to say this, but here's the thing. If we fix the problems of factor markets that have been spoken about, if we use the PSU land to sort of create plug and play opportunities, why are all the investments going to Tamil Nadu? There must be a reason why investments go to Gujarat. What are the best practices there? Why can't other states adopt them? Simple.
That's a point for Maharashtra politicians to consider. Quick point, Rajat. I think
Radhika. Wrap up. Radhika and Nilesh, and then we wrap up. What would you like to see most? Like, if there's a 125-day plan that's being worked on by different ministries, Radhika Gupta, if you had an opportunity to lean in and suggest, what would you like to see the new government do immediately?
One, as I say, I keep repeating, consistency of what has been done in the past. So consistency on the thrust in manufacturing. I do believe that the new government, this government has just started on that journey. And I think between China plus one, the next 10 years can make India a manufacturing hub in the way that we became a services giant. So I think continuation of the manufacturing story, continuation of the defense story, hopefully success in semiconductors. I think one area that has been a little bit of a miss for the government, actually two areas. One is focus on employment. I mean, today we are sitting at 70% young India, and I keep saying the biggest demographic dividend that we have, which is one of the reasons people are so excited about us, can become a demographic liability if we don't get our employment act right. So little bit of work has been done on skilling, employment, education, but I hope in this government 3.0, we really crack that right. So I think that is a very, very important one.
Okay,
and
final
third,
words. Yes.
Go ahead.
Nilesh Shah. your final take on what you would like to see and what do you think is most, with Nilesh, we don't need to ask what do you like to see. I want to ask the opposite question. What do you think is most going to happen? Because you'll have insights into that as well.
So my thinking is that we should just focus on growth, growth, and growth. Growth which is inclusive and sustainable. Growth which is accelerated. We are right now the fastest growing major economy. But to become something like China, to become Viksit Bharat, we need to up the growth and take further. So accelerated growth. And finally, green growth. We can't follow the model of China, otherwise we'll end up blowing this planet. So our growth has to be green. So do everything, whatever it takes to create growth, 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 inclusive growth, green growth, and accelerated growth.
Well, to have Nilesh Shah, Samir Arora, Shankar Sharma, and Radhika Gupta all on the same show is quite a rarity, and it's also a treat. And this is also on a Sunday evening. So thank you very much for taking out time from whatever it is that you all were doing and joining us on India Today Television. Really appreciate this. Thank you so much. We look forward to seeing what happens tomorrow. Thank you. Good wishes. So we'll slip into a break. Thanks, Rajat and Shankar Ayya are going to be with us. Siddharth and his team have an exciting morning, early morning lined up and lots of activity now shifting from the political domain now to the economy, which is where the secretaries have been working, and now the new mantris need to get active as well. So we'll track all of that, slip into a break. We'll have more for you when we come back. We will show you the results of the Odisha and Andhra Pradesh polls. So we've got the State Assembly exit polls for Odisha and Andhra Pradesh counting on the 4th. The exact poll coming up on the other side of a quick break. Stay with us.
Higher, more creation, more possibilities.
What you doing? Yeah, you're getting me down. Got me looking at you, scared in the crowd.
Why do you want to move like that? Why you want
now? Coming for you. Let me show you why.
Introducing Motorola Edge 50 Fusion. Own the spotlight.
सुप्रीम के 9000 से भी ज्यादा प्लम्बिंग एंड ड्रेनेज प्रोडक्ट्स और वाटर टैंक्स बने हैं क्वालिटी रॉ मटेरियल्स एंड इनोवेटिव डिजाइन से। सुप्रीम टोटल पाइपिंग सॉल्यूशन, जीवन भर का साथ।
घर रुंगटा स्टील से बनाया होता तो रईस यहाँ से नहीं आ पाता। रुंगटा स्टील का यही कमाल, एक बार लगे चले सालों साल। रुंगटा स्टील टीएमटी बार, एकदम सॉलिड।
Over the past 75 days, I've had the opportunity to crisscross the countryside and meet netas and voters in every part of the country. Now it's time to come back to the studios and meet you.
Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com.
उन्होंने ये सरकारी एग्जिट पोल करवाए हैं, ये बिल्कुल जाली है, बिल्कुल नकली है, बिल्कुल झूठे हैं। इंडिया जनबंधन के पार्टियों को 295 सीटों से कम नहीं मिलने वाला है। 295 सीटों के ऊपर ही इंडिया जनबंधन के पार्टियों को मिलेगा। ये एग्जिट पोल फर्जी इसलिए हैं क्योंकि हमारे निवर्तमान प्रधानमंत्री और निवर्तमान गृह मंत्री ये सब मनोवैज्ञानिक खेल खेल रहे हैं, दबाव डाल रहे हैं सभी विपक्ष की पार्टियों के ऊपर, चुनाव आयोग के ऊपर, काउंटिंग एजेंट के ऊपर, रिटर्निंग ऑफिसर के ऊपर, और धमकी दिया जा रहा है, एक माहौल पैदा किया जा रहा है।
इसका नाम एग्जिट पोल नहीं है, इसका नाम मोदी मीडिया पोल है। ये मोदी जी का पोल है, फैंटेसी पोल है उनका। सर कितनी सीटें आ रही हैं आपके हिसाब से? सिद्धू मूसेवाला का सॉन्ग सुना आपने? 295, 295।
percent, 12%.
Feeling that post a 20% say tax also we can make similar returns. But if we assume that there'll be nothing negative done on taxes for investors, then I would think in general you make around 15% a year, because that is the history, that is the corporate earning growth on average, that is plus minus 2-3% of the GDP growth, which is say 10-12% in nominal terms. So to make 14-15% at index level has been the norm in the past and quite reasonable to expect in the future. But this month itself, starting from tomorrow, because of recent selling by FIIs being reversed or stopped, and generally a very good exit poll and therefore expected good results, I think this month itself will be very good.
Interesting. Let me now put that question to Nilesh Shah. Now, you also made a point about futures and options, and as I speak to key players, after if they lose money consistently, he'll back off of Bihar. But questions have been asked about
Undoubtedly,
whether
that's an argument.
the JDU would
But in
prove to be the
cigarette
Kamzor
also we
Khadi
put
in the
a
NDA alliance.
sign
Will
that
Tejasvi
cigarette
Yadav
smoking is
be able-
injurious to your health. Why not put that on FNO also? That for an ordinary investor speculating in FNO is injurious to your health. But the larger point, Rahul, is that we have to nudge people towards appropriate investment. Between FY21 and FY23, Indian households put about 4 lakh crore in mutual funds and about 1.5 lakh crore in direct equity. That's about 5.5 lakh crore. But 9 lakh crore has been invested into currency notes. Now, we all know currency note is a depreciating asset. We have to nudge people from being a good saver to also be a good investor. That's the second thing. And in terms of market, I think market will be positively biased because of various things which Samir Bhai mentioned. But I think this is a market where you should be playing for a longer term rather than shorter term. Undoubtedly, markets will go up as well as down. But I think every correction is a great opportunity to add to India growth story.
Radhika, how do you look at the Indian markets at the moment in the international context? A lot of commentary that the price earning ratios are such that the market is already overheated, and a lot of this is just domestic money because it frankly has nowhere else to go, and therefore they keep pumping in those 1,500 odd scripts, and this is not something that can continue. At some point in time, economic reality will catch up.
I don't think the markets are divorced from economic reality. I think foreign investors look at India as a very promising market, a very promising set of demographics, and a policy stability that is now set to continue. Now, when you look at India, you see a promising growing market, and these things are often not cheap. On the contra, foreign investors, most of them who are looking at China, say this is very cheap but uncertain. So in India, you're getting promised a certain amount of certainty and growth, and that comes at a premium. And remember, in the last 5 years, a large part, when we study market returns, they come from two places. They come from multiple re-rating or underlying earnings growth. A dominant part of market return is coming because of underlying company growth. So I don't think the market in broad base is divorced from reality. Could a few stocks, could a few parts of the economy be overheated? Absolutely, that always happens. But coming back to your point on global investors, as I said, I think this is an important catalyst from them. I do think the budget event, Rahul, the first budget is an important one, because I always dread budgets, although this government has always positively surprised me. Because what foreign investors need is an environment of policy stability and tax stability. Sameer also mentioned that. So as long as you don't upset that apple cart, I think you have a great catalyst for foreign investors. But the short-term trigger that could be worrying is what happens in the budget. I don't expect it to be a problem.
Siddharth, you want to take us through the preparations of the budget at the moment?
Again, the core of that is what is being done by the secretaries, Rahul, and there is going to be continuity. And that is why, if you recall, the interim budget had also given a medium term and beyond that view. One quick question to Shankar. Shankar, given the context, and we are still discussing exit polls, from a broader macro and market valuation perspective, are there any risks that you would like to talk about? Because a large part of the audience of this show would be the newer investors who have come into the markets and perhaps lack the sophisticated understanding that you could share with them. What are the risks for the Indian market in the current context?
Good question, because
देखिए, अगर हम मुद्दों की बात करें, लगातार आपके द्वारा आरोप लगाए गए हैं कि मनीष तिवारी है, बाहर के हैं। तकरीबन 125 आपने पदयात्राएं हैं, तमाम तरह की रैलीज की। कितने आश्वस्त ओवरऑल नजर आ रहे हैं? क्या आप देख रहे हैं कि मनीष तिवारी एज अ ओपोनेंट आपके सामने खड़े हैं?
देखिए, मनीष तिवारी जी को आदत है जो 9 असेंबली सेगमेंट के माध्यम से चुनाव लड़ने की। पंजाब में 2 बार उन्होंने चुनाव लड़ा है। अब यहाँ पर कोई असेंबली नहीं है, कोई मंत्री नहीं है, कोई मुख्यमंत्री नहीं है, कोई विधानसभा नहीं है। उनको धरातल पे उतर के काम करने की आदत नहीं है। चंडीगढ़ में यहाँ पर आप देखेंगे कि किसी व्यक्ति को कोई काम होता है तो वो सीधा उसके लिए जो मेंबर पार्लियामेंट है वही चीफ मिनिस्टर है, वही मंत्री है, वही एमएलए है। तो इनको वो आदत नहीं है उतने क्राउड को हैंडल करने की। इनके पास 8-10 लोग आते हैं, वही इनकी जो चौकड़ी है वो उसके बीच में ही उपलब्ध रहते हैं। हम लोग जनता के बीच में रहे हैं, हम जनता के साथ संपर्क है। 6.5 लाख के करीब वोटर है, तो मेरा कम से कम 3.5-4 लाख लोगों से पर्सनल संपर्क है। उनको इतना संपर्क बनाने में मेरे को लगता है 25 साल और लग जाएंगे।
प्रेजेंटेड बाय माचो स्पोर्टो, ये तो बड़ा टॉइंग है। को प्रेजेंटेड बाय आपका जॉय, भारत का जॉय, जॉय ई बाइक। को प्रेजेंटेड बाय ग्रीन लैम लैमिनेट्स, कुछ मेरा कुछ तुम्हारा। ड्रिवन बाय जेके टायर, देश का टायर। पावर्ड बाय एमपी बिरला सीमेंट परफेक्ट प्लस कंक्रीट स्पेशल। को पावर्ड बाय पारुल यूनिवर्सिटी, वडोदरा, गुजरात। को पावर्ड बाय पैनासोनिक एसी फॉर स्मार्ट होम्स। Signature Finest Silver Elaichi, a premium product from Dilbar. Supreme Total Piping Solutions, जीवन भर का साथ। अच्छी नींद पेप्स की गारंटी। पेप्स, the dream makers.